everyone. Welcome to our live session today with Peter. So, new day, a new week. What's driving the markets?
Well, there's an increased market uncertainty about China. There have been protests in China, in major cities of China, about the zero COVID policy of the government. And at the same time, we have to note here that COVID cases in China have reached new record highs, at least since April. So there's a wide uncertainty which tends to create safe haven inflows, say for example, for the US dollar. And on the other hand, it has an adverse effect on riskier assets. And in the FX market, I would be highlighting, say for example, the Aussie and the Canadian dollar. By the way, the Canadian dollar has been hit also by weakening oil prices, which have dropped once again, mainly due to the worries of the oil market regarding the demand side of the commodity, as China is at the same time also an oil consuming giant. So it's a big issue, and given that we have strict lockdowns on the one hand, on the other hand we have also produce in China, the economic outlook seems to be rather grim. And should the Chinese economy actually slow down substantially, that may have an adverse effect on the global economy as a whole.
What's on the calendar for today?
Well, it's an easy Monday. We note that in the late European session, we get from the UK the CBI distributive trades, while in the early American session, we get from Canada the current account balance. Overall, we tend to maintain the view that most probably we will be seeing fundamentals leading the way. I would also note that US traders are to come back from a long weekend after the Thanksgiving holiday on Thursday and a partial close on Friday. So we may see some increased volatility here, especially given the fundamentals we have mentioned earlier.
How about the monetary front?
Well, we have a number of speakers. I would be highlighting four. The three are from the ECB. The first would be ECB's Elizabeth McCall. The second would be definitely ECB President Christine Lagarde. And the third would be German Bundesbank President Joachim Nagel. Now, we expect that most probably Lagarde will be trying to ease somewhat the hawkishness which was expressed by policymakers, say for example, Austrian Holzmann and Isabel Schnabel last week. On the other hand, though, we may see Nagel reiterating the hawkish side for the bank. And should that be the case, we may see the euro more or less getting some support from Nagel, while from Lagarde it may weaken a little bit. From the Fed, I would be noting New York Fed President Williams. He is practically, New York Fed is the largest central bank practically in the US, and I think Williams is going to be among the heavyweights of the Fed policymakers.
And what financial releases would note in the coming days?
We have a busy week ahead. I would make a start with Tuesday when we get from Germany the preliminary HICP rate for November. I would be also noting on Tuesday from Canada the GDP rates for Q3. A possible acceleration of Germany's HICP rate could provide some support for the euro. On the flip side, should it slow down, that would imply practically that inflationary pressures within Eurozone's economy have peaked and most probably are on their way down, which may ease the pressure on the ECB somewhat. On the other hand, for Canada, should the GDP rate slow down, most probably we will be seeing, given also the risk of sentiment of the market and the drop of oil prices, the CAD rolling down, weakening further. On Wednesday, I would be noting from China the National Bureau of Statistics manufacturing PMI figure. That's for November. And should the figure drop, which given the lockdowns, there's a good chance for the downside, we may see the Aussie weakening, as that would imply practically that we may see also an adverse effect on Australian exports of raw material to China. As should the manufacturing sector slow down the economic activity, definitely there will be less needs for raw materials, so that may have an adverse effect on the Aussie as well. I would also be noting on Wednesday from France and the Eurozone the preliminary HICP rates. Once again, a slowdown, a slight one, but still a slowdown is expected in both rates, and that could reaffirm also Germany's preliminary HICP rate for November, and most probably may have a bearish effect on the common currency as such. Other than that, I would be highlighting on Wednesday, that would be one of the main releases for the week, the US GDP rate. It's the second estimate. A possible acceleration could provide some support for the US dollar. On Thursday, we're getting also a number of releases. The main are two. The first would be from China, the Caixin manufacturing PMI figure, like the NBS manufacturing PMI figure. Should it slow down, or if you prefer, show a slowdown for economic activity for November, could weaken the Aussie. And I would also be highlighting from the US, the ISM manufacturing PMI. The reading is expected to drop even slightly, but below the reading of 50, showing a contraction. Should that be the case, we may see the US dollar weaken. And finally, on Friday, we have two releases. The first would be the US employment report for November, which is the crown of financial releases for the week. Now we expect the NFP figure to drop. The unemployment rate is probably going to be remaining unchanged at 3.7%, and the average earnings growth rate to slow down. Now, should the unemployment rate remain unchanged at 3.7, that would imply that the US employment market is still tight. On the flip side though, a possible drop, substantial drop of the NFP figure could be sending some negative signals about the US employment market, as that would imply that practically its ability to create new jobs is being compromised and could imply a slack in the US employment market. At the same time though, we are also getting from Canada the employment change figure. And the employment change figure is expected to drop from the stellar 108K to minus 10K, which, given that also the unemployment rate is expected to tick up, could weaken the Canadian dollar. And it's going to be an interesting read, because definitely a correction lower for the employment change figure was expected, but to drop into the negatives, that would be a little bit too much.
And any final comments for today?
Yeah, for today, I would be noting, I would like to see how the US stock markets will be opening. It's going to be, I think, the first full day after Wednesday, and definitely we are going to be watching out to see how the market sentiment will be reacting also to the news from China. Other than that, I think that in the coming days, market attention will be shifting more towards the US dollar, especially after Wednesday, when we get high impact financial releases on Wednesday, Thursday, and Friday. And I would also be noting on the monetary front, we have noted ECB President Lagarde today, but in the coming days, we will be getting also statements by Fed Chairman Powell. We will be getting from RBA Governor Philip Lowe, and I would also be noting BOJ Governor Kuroda. So we expect a mix of high impact financial releases along with changing fundamentals to create a very fluid situation in the markets, which may increase volatility substantially.
Thank you, Peter. Stay tuned for our next live session with Peter.
Welcome to the technical analysis part of the presentation for today. In front of your screens, you have the US dollar index for our chart. All charts to be presented are to be of the same time frame unless otherwise stated. Okay, let's make a start here. And I was already working before you actually entered. Now, the US dollar index was on the rise on Friday. And that continued also during today's Asian session, early Asian session. Most analysts, myself included, tend to note that there may have been some safe haven inflows for the US dollar from the protests in China. And I think about China also one big issue on a fundamental side is how will the Chinese government react? It has to balance on the one hand between rising COVID cases, and on the other hand, it has to calm down protests about its zero COVID policy. And I think it's in a difficult spot, and it will be interesting to see how it will be actually juggling between the two. Now, the US dollar index, despite the rise of Friday and during today's Asian session, dropped, relented any gains made, and is now testing the 105.55. By the way, the first resistance line here was at 105.70. We lowered it a little bit just to show the lows of the past few days and actually reflected better. And definitely this has to be corrected and be turned into support line until it's clearly broken. It's actually teasing it right now. I would be making more corrections here. No, definitely this goes up at 109.10. But I'm about to widen just a bit the support lines. Actually, it has just been broken, the 105.55, so let's keep it that way. But I would like to have another look at the support lines and the validity. Especially the downward motion of the US dollar index during today's European session, early European session, sent some worries out. Let's widen them a little bit. Okay, that was valid. Seems to be a support level here with the Joe, and definitely this will go lower. at the 103.50. Let's lock this in. Second support line at this show, and that would be the 101.30. And another true here. I think we have more touches here. And that would be the 99.60. Oh, that's too low. Sorry. 99.62. 60? Okay, let's readjust and correct the labels. That's better. Correcting the labels. Okay, the first resistance line remains at 105.55. It has just broken below it. And actually it's testing it right now. It's just below the reading. It stays. I'm keeping also 107.15 and the 109.10. So we have nothing changing on the upside. On the downside, we have the 103.50, 101.30, and the 99.60. The bears have the first call here, and it seems that the US dollar index has broken the 105.55. Should there be further retreat of the US dollar index, I think we're going to be talking about a bearish outlook for the index, given that it has broken the lower boundary of its past sideways movement. In which case I wouldn't be surprised to see the price action reaching, if not even breaching, the S103.50. Such a development could practically pave the way for 101.30. Note how the RSI indicator is pretty low. It's actually at 35. And that tends also to imply a bearish sentiment, which, if it's being expressed also on the price action, I would expect it to drop far lower. And there is a catch here. The catch is that we have the lower Bollinger Band right here, which still has some distance from the price action that allows the bears to have some room to play here. But once the price action hits on the lower Bollinger Band, we may see a slowing of the bearish price action. On the other hand, should the pair stabilize, for the time being, once again, we tend to favor a bearish outlook, yet we would like to see a deeper cut lower. But should the pair stabilize, the index stabilize, I would expect it to rise slightly and remain above the 105.55, continuing like this. Now, a bullish outlook for the time being seems to be not so probable, but it's still possible, so shouldn't rule it out. In which case, I would expect the price action to reverse direction, break the 105.55, definitely break the 107.15, and aim for higher grounds. That would allow us to say, yes, that the bulls have come in and have taken the initiative. Let's have a look at Euro USD. Euro USD, which is on the rise, reflecting practically the weakening of the US dollar. And for a bullish outlook, I would require a clear breaking of the 1.0485 and the price action to start aiming for the 1.0605. Mind you that the RSI indicator is pretty high, implying a bullish sentiment. So that's another bullish sign. It's currently at 65. On the other hand, though, note how the price action has hit the upper Bollinger Band, which may slow it down somewhat. Now, should the bulls take over, I would expect the price action to break the 1.0485, and I wouldn't be surprised to see it even breaking the 1.0605. Should the pair decide to respect the R1 and stabilize, I would expect it to remain in the spectrum here, between the 1.0485 resistance line and the 1.0360 support line. A bearish scenario may imply that the pair will be dropping, definitely breaking the S1, which, by the way, could be a little bit lower, could be set at 1.0345. Check the label as well. Bearish scenario would require practically the price action of Euro USD to reverse direction, break the 1.0345, and aim for the 1.0220. The S2 has proven its validity to the downside here and to the upside here. I'm keeping it. To the upside, let's have a second look at the resistance levels once again. Because it has not seen such levels, it hasn't broken above the 1.0485. The last time it was tested was here. Okay, this is the validity to the downside as well, so it's pretty valid in keeping it. And this one. Okay, it was tested to the downside, to the upside. Seems to be pretty solid. It's the 1.0605 and the last resistance line. Beautiful peak here, reversing the upward motion into a downward one. And that would be the 1.0785. They're valid. Okay. So for the time being, we tend to maintain a sideways motion between the 1.0485 and the 1.0345. We're issuing a warning here, though, for a bullish movement of the pair, given that we have a steeper rise during today's European session. Also, there is an RSI indicator which is warning us about the bullish sentiment. Yet, for a bullish outlook, we would require clear breaking of the 1.0485, a higher peak than this one. And in that case, we may see it aiming, if not even breaching, the 1.0605. Should the stabilization be maintained and the pair respects the R1, then we may see the price action being confined between the R1 and the S1. While should the price action drop and the bearish sentiment takes over, we may see the price action breaking the 1.0345 and start aiming for the 1.0220. Let's have a look at GBP USD. A similar picture, however, the pound seems not to be as able to take advantage of the US dollar's weakening. So there is some, I wouldn't say inherent, but still some weakness present for the pound today. For the time being, we tend to maintain a bias for sideways movement. The big question here is whether to readjust the R1. In my opinion, it is valid. I would be placing it here. It's pretty narrow, no, but for me, that peak here is important. And that would be at the 1.2150. Let's have a look at the other resistance lines. Let's load the second one. I'm keeping the third one. It's a beautiful touch here. And that would be the 1.24. To the downside, definitely the S2 is valid. Okay, let's widen this. Drilling out to the daily chart. Drilling into the 4-hour chart, well, that does not allow us to get a picture on that. Yep, let's widen this as well. We have a very tight sideways movement currently. Let me show you. Let's correct the necessary labels. 126.60 remains unchanged. Second resistance line now is being placed at 1.24. First resistance line at 1.2150. $120.20 remains the first support line. 117.16, beautiful touch here, also remains on. And then we have the 1.14. Sorry, give me a sec. 1.1415. Beautiful upward touch here. Could go a little bit lower, but for the time being, based on the reaction we saw before, I think I'm going to be keeping this tree as such. A very tight range bound movement. It's very, very characteristic. And that's for the pound, in my opinion, something which is out of the ordinary. Usually the pound is more volatile. And I wouldn't be surprised to see all this condensing of the price action, all this consolidation practically at some point breaking out. And we may see a boom here. For the time being, we tend to maintain a sideways bias between the 1.2150 and the 1.2020. And there is a slight indication that the bulls may have the upper hand, as we are talking about the RSI indicator being at 64.58. Should the bulls take over and we get a clear upward movement, we expect the price action to clearly break above the 1.2150 and start aiming for the 1.24. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.2020 and start aiming for the 1.1760. Definitely this narrow sideways motion here will widen at some point. However, we highlight the sideways movement with this peak and this trough. Let's have a look at USD/JPY. Okay, USD/JPY, which seems to have continuous downward movement. And it doesn't show, or if you prefer, it's interesting that the pair's weakening has started since Friday afternoon in the American session. Let's have a look at it. This was on the 25th, early in the European session, not early, in the European session. So practically, we may see a USD weakening and at the same time a JPY strengthening. And in contrast to, say, for example, the pound or the euro, which we have checked before, or even the US dollar index, which showed us that up until today's Asian session, early Asian session, the US dollar was on the rise. That was not reflected in USD JPY. There are fundamentals which are supporting the JPY right now and are driving the pair lower. Most probably, given Friday's fundamentals, I would say that the fact that the market's expectations about an easing of the rate hike path of the Fed may be reflected here, favoring the JPY, favoring somewhat BOJ as well. So the bearish movement may probably be continued as bearish trend line is being formed. We can see that we have one peak, lower peak, a third peak, which is even lower. Okay, I'm keeping it from this band. And we have two consecutive lower troughs. Also, there are some indicators at the reading of 30. It's actually at 28, which underscores the dominance of the bears right now. It's a strong bearish sentiment. On the other hand, though, it may imply that the pair may have reached oversold levels and is ready to correct a little bit higher. So that should not take us by surprise, but as long as the downward trend line remains intact, we maintain our bearish outlook. Note that there is still some slight space between the price action as such and the lower Bollinger Band, which allows for further bearish tendencies to occur. Should the bears maintain control, given the volatility of the past 12 hours, I wouldn't be surprised to see the price action breaking the 136.15 and start aiming for the 134.60. On the other hand, should the pair stabilize, I would expect a breaking of the pre-mentioned downward trend line and the pair to remain just below or revolve around the 138.45 resistance line. A bullish outlook, however improbable that may sound, it's still possible and should not be excluded, in which case we may see the price action rising, breaking the 138.45, breaking clearly the downward trend line, and the pair starts aiming for the 140.70 resistance level. Once again, for the time being, and as long as the downward trend line remains intact, we maintain a bearish outlook. Let's have a look at USD CHF. Clear sideways movement. It's very characteristic how JPY got some support also by the situation in China, while the CHF did not. The CHF seems to be reflecting mostly a weakening of the US dollar, yet contained between the 0.9495 resistance line and the 0.9395. And definitely the market reaction is lower. So we tend to maintain a bias for a sideways movement, given also that the downward trend line here has been broken. And the sideways movement would probably be between the 0.9395 and the 0.9495. So it would be something like this. Okay, let's have a look how the market would move for USD/CHF should the bears take over. And I'm mentioning the bears because the RSI indicator is not far away from the reading of 50. It's actually at 41. But I'm a little bit worried because we see that the RSI indicator since the 22nd of November was practically not able to surpass above 50. There is a constant bearish sentiment which tends to imply that the bears are still not out of the picture. And in which case, should the bears take over, we may see the price action of USD/CHF dropping, breaking the 0.9395, thus paving the way for the 0.9285 below. Now, also note that we have the 100, the 50, and the 20 moving average. All three of them show a downward slope, which is indicative of the downward movement of the pair. But nevertheless, let's not forget, moving averages are followers, they're not leaders. So practically, what the moving averages are doing is that they're reflecting practically the downward motion the pair already had. They do not foreshadow what direction it will maintain. Once again, for the time being, we maintain a bias for sideways movement between the 0.9495 and the 0.9395. For a bearish outlook, we would require a clear breaking of the S1 and the price action to start aiming, if not testing or even breaching, the S2 0.9285. For a bullish outlook, we would require clear breaking of the R1 0.9495 and the price action to reach as high as the 0.96, which is the former peak here, and was around the 22nd of November. Let's have a look. 21st, yeah, 21st of November. Let's move to commodity currencies. They should have suffered the widest hit and are rebounding. AUD USD, ladies and gentlemen, can see how the price action with a beautiful upward trend line has been broken now. And it's interesting how it has been broken in the Asian, in the early Asian session today. The pair dropped, beautifully tested the 0.6660, it held its ground and corrected upwards. So for the time being, we tend to maintain a bias for a sideways motion between the 0.6595 and the 0.6795 and the 0.6660, the R1 and the S1. Should the bears take over, which is possible as there's a series of lower peaks being formed here and lower trows, so we may see that more clearly. Let me drill into the 1 hour chart. A peak, a trough, peak, trough, and we see stabilization here. Back to the 4 hour chart. Should the bears take over once again, we may see the price action dropping, breaking the 0.6660 and start aiming for 0.6545. In any case, I would require a clear breaking of the 0.6660, the S1, and that's a good reason why. It's because I want to see a lower trough than this one. So long as the S1 is not broken, I remain sideways. Should the bulls take over, we would expect a rise, a breaking of the R1 0.6795, the price action to start aiming for 0.6915. Now, in favor of the bulls, however that may sound improbable, we have a 20 moving average, a 100 moving average, and the 200 moving average all moving in the upward slope, so there may be some bullish tendencies. Note how the RSI indicator, though, has reached once again the reading of 50. Seems to be stabilizing for now right there. But should it advance higher, that may imply that the bulls are slowly taking over. And that may allow the pair to rise, break the R1, and start aiming for the R2. Let's have a look at USD CAD as well. Okay, it's a sideways motion, that's clear. Let me reset the boundaries though. These are the boundaries. Green. And before we finish, I would like to have a look also at oil. I'm keeping this. It's a nice show here. I'm keeping it. And definitely I'm going to be lowering this one somewhere here. Next peak, this one. I would like to have a second look at the R3. S3, sorry. Nice shows here, but we have another one here. Okay. Let's widen this. We adjust. Let's correct the labels. Locking in the support lines. Let's move to the resistance levels. $1.3570. So we are we have recalibrated practically also USD CAD. There were slight changes. I think that gives us a clearer picture here. We have USD CAD, which was on the rise, hit the ceiling at 1.3470, which used to be a support line here. Now it's a resistance line. So we tend to maintain a bias for a sideways motion between the 1.3470 and the 1.3320. We're talking about a distance of around 150 pips. It's pretty wide, but still it's quite a volatile pair given that it's a commodity currency pair. And the market sentiment is playing a major role here. On the other hand, should the bulls maintain control once again, we may see the price action rising, breaking above the 1.3470 and start aiming for the 1.3570. Definitely, I wouldn't be adopting a bullish outlook if the R1 remains intact. We require a clear break above it, so as the next peak is going to be higher than this one. On the flip side, should the bears take over, we would require clear breaking of the 1.3320, a lower peak true than this one, and the price action to start aiming for the 1.3230. For the time being though, and as long as these two lines, the S1 and the R1, remain intact, we maintain a bias for a sideways motion. Now let's have a look also at WTI. It's, oh yeah, it's a trading instrument which we haven't touched for a while, and it has an insane drop lower. Definitely all these support lines have to be corrected and be set as resistance lines. Let's go hunting. Let's go find some new support lines. There's one here. Too close to the price action. Way too close. This one would be more valid. No, I'm keeping that. It's a good one. And this is the final one. Okay, this would be the 0 points in green. 72.55. $70.15 in green, please. And the final one at 66.10. Once again, green. Readjusting the levels. Let's correct also the labels. That should be it. So we have a clear downward trend line. Let me clear this up. Guiding the commodity's price, we tend to maintain a bearish outlook as long as the price action remains below the downward trend line we have drawn. I wouldn't be surprised to see the price action breaking the 72.35 as one. I wouldn't be surprised to see it even breaking the 70.15 and start aiming for the S66.10. Mind you, the RSI indicator is below the reading of 30, implying also a bearish sentiment, yet may have reached oversold levels and may be ripe for a correction lower. It's also interesting that the price action has regions now flirting with the lower Bollinger Band, which may slow down the bear somewhat and allow first for some room to be created between the lower Bollinger Band and the price action as such. So a correction higher could be in the cards, but overall the sentiment remains bearish here. We had also a question. Thank you very much for your nice comments. So that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello, in today's session we will look at platinum as a trading instrument and its appeal to investors. The precious metal has posted significant gains the last few years, especially due to rising demand after COVID-19. However, it is often ignored by investors who turn to gold and silver markets due to the higher volume. Platinum is important for the growth of the hydrogen economy, and demand could expand even further, posing plenty of opportunities for platinum buyers. In the meantime, there are possible trading risks to consider, including a strong USD and falling platinum demand. The pandemic has changed many things and unsettled demand and supply in platinum. While jewelers and car makers were not so interested in the metal as in earlier years, COVID-19 has driven money to precious metals, with many investors turning to platinum. At the same time, its supply was also hurt as lockdowns did not allow for its mining. Platinum is mined in South Africa, in Marikana, with the first platinum nuggets being discovered back in 1924. Anglo Platinum in South Africa is considered to be the world's largest producer of platinum. 7 million and 8 million ounces of platinum are used each year. Platinum plays an important role in renewable energy, especially in electrolysis and in the fuel cells that use it. The hydrogen economy refers the use of hydrogen as a fuel for heat, hydrogen vehicles, energy storage, and transport of energy. The use of hydrogen promises to reduce fossil fuels and limit global warming. Many countries, including the European Union and China, have pledged to reduce carbon emissions by 2050 to 2060 and are invested in hydrogen power. Renewable hydrogen technology generates gas from water and stores it in fuel cells to be used in homes and vehicles. The wider use of hydrogen technology in the near future will require increased quantities of platinum. The limited supply of platinum, coupled with the possibility of hydrogen technology boosting demand for platinum, provide a bullish outlook for the precious metal for the coming years. Investors would be interested to see what will happen to the precious metal and its role in hydrogen economy, but also whether automakers will return to platinum in the future, as the current prices are a strong incentive. This could also push demand for platinum higher. Thank you for watching.
So yeah, let's begin. So yeah, the turtle trading strategy. Have you guys heard about it? Turtle trading strategy. So it was a pretty successful trading method. Well, it's usually used on the daily. So I'll show you guys. So yeah, welcome everyone for joining. My name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So our company, Everest Fortune Group, we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So yeah, so we actually have a special collaboration with IronFX where we are bringing you guys the good stuff. Okay, the agenda, the topics for today. Who were the turtle traders? What was their trading strategy? Breaking down their strategy and improving on their strategy. We also will look how we can craft our strategy. Well, I'll be showing you guys how I implement it with my personal trading method. So yeah, who were the turtle traders? Let me get my device over. Okay, who were the turtle traders? Well, they were two people, two of them, Richard Dennis and Bill Eckhart. So they were part of an experiment in 1983. It was run by them, Richard Dennis and Bill Eckhart. They wanted to test if successful trading could be taught to novices, people who did not know how to trade. So they taught the turtles who were their novices, a trading system that resulted in very positive results among the study participants. Also, some traders continue to use their trading system or their own version of it up to this day. So this method was from 1983. Just a very, very quick history lesson. Let me get the participants out. Okay. What was their trading strategy? So they enter a buy when price breaks above the 20/55 day high or low. I'll show you guys the indicator on TradingView in just a bit. So their stop loss is pretty subjective. A pretty subjective stop loss. Risk management as usual, only risk 1 to 2% of your account. For me, I personally risk 1% or less of my account. So it's the same for short trades. Price breaks below the 20/55 day high or low, and then you take a short. So yeah, they actually did the experiment. So Dennis, so this guy Dennis right here, Dennis actually believed anyone could be taught to trade the futures markets, while his friend right there, Bill Eckhart, he countered that Dennis had a special gift that allowed him to profit from trading. So he felt that only certain people could trade, and most people are not meant for trading. So he used his own money and brought in some trading novices. Was a tremendous success. So the question right now is, the market conditions are always changing. We want to know whether this style of trading can survive in today's markets, whether does it still work. So turtle trading is also based on purchasing a stock or contract during a breakout, quickly selling on a retracement or price fall. So yeah, they usually do it on the daily. It was also one of the most famous trend following strategies. So they actually turned $5,000. How successful was it? Into more than 100 million just by using the turtle trading strategy. So yeah, it's extremely successful. It was a successful experiment, but now we want to know whether this style of trading can continue to survive in these volatile markets. So yeah, breaking down their strategy, they actually use the 22 and 55 days setting. Let me get it out in charts. Okay, so this is how it looks like. You can search on it. It's called the Donchian channel. So after I present this part, I'll get to trading view. So the breakdown, the 55-day setting is normally used for the, okay, I think I had this part wrong. Give me a moment. Not sure why this part. Okay, this is the 22-day. My bad, guys. So let's continue. So this the 22-day setting is normally used for short-term trades and for scalps. For scalping, so this is the daily chart. Well, for the 55-day setting, you notice there's quite a big difference, 22-day and 55-day. So it's long-term, it's more for long-term trades, it's more refined, so there are lesser opportunities to enter a long or a short. And it's better to use the 55-day setting. So yeah, let's get right into trading view first. Let's get right into that. So trading view. So let me load out my layout. Why am I opening the file? So yeah, nice. Pretty good. Let me clear this out. Okay, let's take it on Euro. So you can actually search indicators. You guys can follow me, whip out your trading view. And take out your trading view and then you search Donchian channels. So this is what the turtles used when they were trading back then. So someone actually made an indicator out of it. Donchian channels. So you click on it. So you can take a look. So how do they trade? So example, let me set the thing to 55. 55 days, 55 settings. So for 55 is more accurate, but the chances of the probability or trade opportunities are lesser, but it's more accurate. So let's say you take a short here. So I just give a very, very quick explanation on how it works. So the moment price moves, and then it taps into the bottom this turtle area, and then you sell. So it's just a very simplified term. You sell, and then you take profit. You continue holding, but they only take profits when there is a price is pulling back or consolidating. So they only take profits when price pulls back or consolidates. So price can move, and then consolidating here, they can potentially start to take profits, close out their trade, or wait for price to tap into this orange color line. So I'm actually simplifying the terms, make it easier for you guys to understand. So yeah, they either through a consolidation, pull back a bit, some traders shut it down, or consolidate, shut down the trade, hit back onto this nice little orange moving line, they close out their trade. So yeah, how about taking a long? So let's say price taps into this area, they take a long position, but their risk to reward isn't that good. So let's say they take a long right here, but price below, stop loss, and trying to aim for one-to-one risk to reward, but it never happened. It didn't happen. So price nearly even hits the one-to-one risk to reward, but then it reversed back down. So yeah, that is why they manage their trade when price seems to be pulling back. So yeah, I honestly think it might be a pretty dangerous style of trading. You guys might have to back test it first. So yeah, this is only one indicator, and I always stress, please do not just trade using one indicator alone. Always use multiple indicators when you are trading. So yeah, let's take a look. Another example right here. Price tapped into that area. Okay, this area, it was a fail. Price went up, failed to break, stop loss. So this trade would be a wrong trade. So let's say here you take a long, price went up, long stop loss at the bottom. You can be here, can be here. It's very subjective, as I mentioned in the PowerPoint earlier. It's a subjective stop loss. So let's say if you put your stop loss there, you don't even get one-to-one risk to reward. You get 0.9. But there are some ways you guys might potentially, you can refine it. Maybe you think that price might not hit back down to this area. So you might have a 1.26 risk to reward, but always do remember that is just the best possible scenario. So best possible scenario is at the top, but no way that we can trade and have a very, very perfect exit, right? So let's look to the left of the chart. So maybe there's some kind of potential area that we might want to take profits at. So let me clear this out. Actually, so far, where are you guys? Just interested, where are you guys tuning in from? See, you guys have nice names, Michael, Dale. So yeah, I'm from Singapore, by the way. I'm from Singapore. Let me send. So yeah, hi Josh, hi Antonio. Nice to have you guys on here. Is it the first time you guys heard about the turtle trading strategy? Let me continue. So yeah, with that said, with price heading up, best possible scenario, maybe we have a nice area right here. We might have an area. Some people might take profits over here, or they might take profit over here, or they want to take it when it clears the high, or even this high. There are many take profits area that you guys can choose. It's still very subjective, taking profits. Oh, nice, you are from the United Kingdom. Okay, I always wanted to go to the European side, UK. So I guess we are like across the entire world. We are far apart. So yeah, I'm in Asia. My country is very, very small, Singapore. So yeah, let's say you take profits here at the very, very top. Your risk to reward would be pretty bad. 0.67. But if you take profits at the high right here, I'm just showing possible scenarios. We might not always get this right. The risk to reward, just right, it hit 1. So yeah, the Donchian, this turtle trading style is actually taking quite long to take profit. So let's say I pull. It took a good, took quite a while. 2 days, 12 hours to take profits. But let us look at the daily where the original method was used. Okay, nice. You're from Portugal. Which part of the world is that, may I ask? What is the closest country? Let me check. Portugal, Spain. Nice. Okay, nice deal. South Africa. Wow, we have everyone from all around the world. Nice. All right. So we take a look. Let's say we go for short. Price moves. Wait, let me clear this out. Price moves, and then tap. We short. We take a short right here. Our risk to reward, we have it right up there for stop loss right there. But pulling it down, we want a minimum of 1-to-1 risk to reward. So let's say we are just talking about the best case scenario where price hits 1-to-1. It took very, very long, even on the daily. It took a very good 62 days for 1-to-1 risk to reward. That's not counting your commissions, the commissions you have to pay to the broker or the swap fees. 62 days for 1-to-1. So that is basically how the turtle traders traded. Okay, I see 2 Antonios. Are you guys the same person? Okay, yeah. So let's look at the long. I'm just looking for a possible long position. So spotted this area, price taps at the very top. Let's take a long. Okay, nice. You are the same person. Okay, nice. Okay, price went up, tapped, we pull, we have a stop loss right there, and we pull it up. We want a best possible scenario, 1-to-1 risk to reward. So pulling down, okay, this is actually not bad. It took a good about 7 days, 1 week for 1-to-1 risk to reward. So yeah, so you guys got the gist, a rough idea on how the total trading strategy is used. They are usually on the daily using the 55. For those who have just joined, it's called the Donchian. I saw quite a few people slipping in. It's called the Donchian channels. Donchian channels. So yeah, I'm using the 55 rank. It's for longer term trades. So let's get back right into the charts, since you guys have already have a gist of what is going on. So yeah, you can improve on their strategy. So you are looking, their risk to reward isn't that great, but we want to involve other indicators, other type of concepts such as the MACD, stochastic, smart money concepts, and even ICT concepts. Any of you guys using the MACD, stochastic, or even smart money or ICT concepts? Do let me know in chats. Do you guys use that? Maybe you guys can, back test it out, see whether it's possible. Moving on to the next slide. So yeah, we can implement the moving average. So yeah, the moving average is actually already inbuilt in the Donchian channel, is the orange line. So I'll just move on from there. Moving average, when you just adding confluence, price steps into that area and price is underneath the orange moving average line, guys can sell. But then maybe I'll show you guys better methods to increase your risk to reward ratio and have a better entry. So maybe you guys can implement this stochastic indicator. Price goes up at this area, it's coming down. So we are looking at maybe possibly this area. Price is coming downwards. You can sell it, sell until price hits the oversold area. So at the oversold area right there, you guys can probably exit your trade. Let me clear out this chart. It might be a little bit messy. So yeah, in another scenario, okay, let me move up. In another scenario, using the stochastic indicator, price, let's say it's here. You're looking for sell. Price went in, continue sell. But where can you potentially take profits? So around here, maybe when price starts to reverse back up, this area I see a reversal. So moving upwards, it's around here. Potentially, you might have actually closed your trade already just by implementing stochastic to the total trading strategy. So yeah, my very, very favorite method is using smart money concepts. So just by using smart money concepts, I can potentially know where to take profits or start to look for a sell. So maybe at this area, price went up and I can start to buy. But, sometimes your risk to reward might be negative. A negative risk to reward, but you don't know where to take profits at. So take profits, you can use smart money concept. So this is called the supply zone. So at the supply zone is an area where you can potentially take profits, stop loss, not sure how, it's on the daily, it might be possibly at the bottom here. Take profits right there. Risk to reward is negative, but profit is profit, right? I actually do know some people who are profiting using a negative risk to reward. And yet they are full-time traders, negative risk to reward, scalping. They are just scalping, everything adds up, they make money. So yeah, this is another way that we might potentially enter. Let's say this area right here. Let me clear out the charts. this area right here that we are looking at. So price goes down, breaks. But you want to have a better entry. So we wait for a pullback, a retracement pullback for price to tap into the supply zone. And then we short. We take a sell with our stop loss at the top there. And then the risk to reward might potentially increase to maybe 1 to 3, 1 to 2. It's even better. Let me go to the live charts to show you guys. So yeah, so maybe on the daily right here, let me clear this out. So let's say price coming down, coming down. Then you want to sell. Coming down right here, you want to sell. But wait, hold up. Let's price. So in another scenario, you wait. And price already went quite low. It's not wise, like, to have a sell right here if you missed out on the entire trade. Stop loss at the top. But by then, how long do you want to wait for 1-to-1? It's going to take weeks, months to have a 1-to-1. So how are you going to improve on that? So using smart money concepts, you can potentially use and possible, what they call it, a breaker block. Why is it called breaker block? Because using smart money concepts, this is the last area. Let me draw it out. Where's the brush? Where's the brush? Okay, this is the last candle that caused the rise up and break in market structure. So this candle caused both of that. So looking at that, we can potentially have a short. You guys can actually look up on smart money concepts on YouTube. It's very informative. You guys can actually have some kind of. So actually, sometimes when I use smart money concepts, I managed to get some pretty nice sniper entry type of trades, looking nice. So you look at your meta trader, you shot from the top. It looks pretty nice. So yeah, it looks like it's an Instagram style trade. So yeah, it's pretty nice. You guys can look up on smart money concepts. So with our stop loss at the top here, at the last area that caused the break in market structure, our risk to reward has significantly improved. So let's say we want a 1-to-1 risk to reward. We only got to wait instead of 7 days. Just now the best one was 7 days. We waited in total of only 8 days. Okay, still 1 week, but it's much better. So normally where you want to aim is for price to continue going down. As I mentioned, the turtle traders wait for price to consolidate, or tap back into this line for them to close out their trade. So potentially once this area starts to consolidate, they might have already closed. So to give a benefit of a doubt, maybe they close it right here. It can be anywhere, but then the risk to reward is more than 1-to-1. For this scenario right here, it's, you can see it's 1 to 1.43 risk to reward. So yeah, any questions so far? If you are confused, do let me know. I can slow down. I can re-explain what I was explaining. Any questions? Or what kind of trading methods do you guys use? Maybe I can try to help implement it into the turtle trading strategy. Do let me know. I'll try my best to help you. Wait, so let me adjust this mic. Okay, all is well. Let's move on. So yeah, maybe I'll just show more examples. Closing this out, I just clear the chart. Oh, you said you are new in this, so you are just adapting to this area. Oh yeah, what do you mean by you are new in this? Are you new to trading? Are you new to trading, or is this a new trading style that you are probably looking at, the turtle trading strategy? Adapting to this new area. Do let me know if you are a beginner, so I can maybe slow down, try to explain more of those slightly confusing stuff. Let me move this, move that. Okay, so while maybe you are typing, I'll just continue for a while. So yeah, looking at this area, maybe looking at this area, price, tapped, looking for shorts. So you actually saw price, let me get the brush out. Brush tapped into the bottom area, but if you look for short immediately, it would have been a stop loss at the very, very top, stop loss there, and you got a best case scenario, not even a one-to-one risk to reward. So let's implement smart money concepts here. Let's implement it here to have a better entry. So what you want to do is wait for price to retrace. So price retracement, meaning you are waiting for price to head back up for a better solid entry. So this is where you can actually implement the, let me get this out, the supply zone right here. So with that supply zone, I'll just put it in red. Supply zone there, you can take a shot and your stop loss at the very top at the previous high. Let me get the, where's the call out? This is known as the previous high. So yeah, your stop loss can be at the previous high, and then one-to-one risk to reward. It took around 7 days. It's still 6 days. Pretty much nice, but as usual, for turtle trading strategy, you continue holding your trade. Just remember, this strategy is for people who do not know how to trade. They are novice traders, so they would not know that if price has broken some kind of random area like here, so they would probably control their trade. No, for total trading, you are just new to trading, you hold, the trade went down, but then price reversed. So price reversed, wait, let me get the brush. So price reversed up here, you might probably close your trade back up there with a 1 to 1.45 risk to reward. So yeah, turtle trading is just holding. They enter already. They just hold until either price reverse or consolidates. Hey, yeah, you are new. You are in Iron just with a friend that's trading for me. Oh, so you actually do you put money with your friend and he trades for you? Trades for you, but I would suggest you learn trading so you can actually enter your own trades. It's better to learn trading, instead of asking. I know it's fine to ask someone to manage your money, but it's also good on the side, especially now you are joining this webinar, you are learning, understanding how trades are executed. It's very, very good knowledge. So when I first started trading, my friend put me in, same thing. I actually gave some money to him to ask him to manage, but he actually blew the small accounts. I gave him a relatively small account, $100 only, since he said he knew how to trade. So I gave him $100, let him manage it, but the risk management was pretty bad. So yeah, he actually blew my $100. Oh yeah, you said your friend is trading daily, buy and sell in the same day. Oh, how's his performance? Is he making a sizable return? How much percentage is he making back on the accounts? So yeah, so I was saying back then, my friend actually blew my $100 that I gave him. Back then, I didn't want to learn how to do trading. I just wanted the money to work for me, getting back a huge sizable sum. Oh, nice. 1% a day. That's a lot, man. 1% a day, that means, okay, plus minus 1%. That's a lot. So to take that, so for those who are listening, 1%. So his friend is actually helping him make 1% per day. So let's take it as a week. So it's 5% a week and 20% a month. Take that into consideration. The account is $1,000. He's getting back $200 in profits in a month, which is very, very good. What method does your friend use? What does he use? What does he use to trade? It's actually a lot, man. 1%. So yeah, just to maybe put into perspective, you know, for small account holders, many of us, oh, you don't know, do ask him. It's actually interesting. You can find out what method he's using, and you can actually learn, can start to research and try to trade on your own. Maybe you can start with a demo account. Why not start demo accounts, start to learn? So yeah, maybe put into perspective. So usually on small accounts like this, $1,000, many people are using $1,000 account, $100 account, $500 account, and even $10,000 account, 10K. So what they like to do is they like to aim for those very, very huge profit return. 10K account, they try to aim 10% per week. So 1 month, 40%, they aim to make $4,000 on their $10,000 accounts. But I know someone in real life, he actually handled, let's put into perspective. This is real life, someone that I know. He was handling $20 million in Forex account. So he was managing people's money, $20 million in cash. And then what was his risk? He only risked around 1% or 0.5% of his accounts. So per month, he only needs 3%. So he was only up 3% per month. This is per month. I'm just sharing my life with you guys, 3% per month. So he's making around 600,000. Let me get the calculator just to confirm the calculation is right. 20 million times 3%. So yeah, it's 600,000. 600K profit. So yeah, if you are looking at a huge amount of money, so 500,000, $1 million account, you guys might probably want to look at the smaller percentage. Just small little 3%, you can make a lot. But unfortunately, not everyone has that privilege. I'll just delete this out. Not everyone has that privilege to, have a very, very huge account, $100,000 account even. So many traders aim for huge percentage gains just to make that nice $4,000, $2,000, $3,000. But when you are chasing the money, just remember your psychology might be hit pretty hard when you lose a trade, because you are just chasing the money. You need to make that certain amount per month. And nice, you are with him for 2 months. So how's your gains with him for the past 2 months? May I ask? If that's a sensitive question, you don't have to answer. It's okay. It's fine if you don't want to answer that. What was the gains that you had? So yeah. So with that, let me continue for a while. Let me continue this area. I'll try to find maybe a long retracement. Let me find a good trade setup. So total trading is not for everyone, because you have to wait. There's a very, very long waiting time for trades to happen and for trades to move to a direction you want, and you have to monitor it. So in such a situation like this, let's show a failed trade. Let's show a failed trade first. So let's say price tapped in, you're looking to sell, but you remember, Yongjing told you to wait for retracement. Wait for retracement, and then price went up, went back up, and then you try to short it at this little area, but price continue moving upwards, hitting your stop loss. So yeah, you should have some kind of nice stop loss, tight stops, where you must set a stop loss. Just remember to set a stop loss. If you do not set a stop loss, you can potentially blow your account. Well, you invested 5K initially. In the last month, you put more than 10K. Hey, that's nice. That's nice. You're with him more 3K plus. Okay, okay. So you actually threw in more money. You made 3,000 over with him. But the very, very big question, okay, just for your safety, you know, just in case you get scammed or something. I'm not saying that your friend is scamming you, but do you have access to the money? Is the money in your own broker account? Or did you pass him the cash entirely? There's a very, very big difference whether you have control over when you can withdraw the money. Better do check that out just in case, you know. I'm just worried about the safety of you guys, man. So yeah, maybe in this situation, okay, we can continue first using the ICT concepts. So who has heard about ICT? Say in chat, what is ICT? ICT is inner circle trader. So that's the ICT concept. You guys can actually learn from him on YouTube. That is his logo right there. He actually teaches things for free on YouTube. You guys can check it out. I think it's very, very informative. I've been using some of his concepts with my trades and it's working pretty well. So yeah, ICT concepts, mainly he has the use of market imbalance. So this is something, market imbalance. This is something that maybe you guys first time hearing it. It's very, very important when you're trading. So I actually back tested the market imbalance concepts that he was talking about. And yeah, it ripped some, it was very good, very good. Let me show you guys on the charts. Let me show you guys, wait, give me a moment, pull things up. Okay. Wait, give me a moment. ICT concepts. So he focuses a lot, from ICT concepts, he focuses a lot on market imbalance. So what do I mean by market imbalance? If you can see right here, do you like it when price does this entire area? Or do you like it when price moves very nicely in a nice order flow fashion? But if price measures down like that, like this area right here, I don't like it. Why don't I like it? It causes a lot of imbalance, like Thanos, Marvel MCU, causes a lot of imbalance on the charts. So what do we have here? If you draw from the top of this area, this candle right here, to, okay, let me get it. Okay, maybe I use a different color. Draw from here to here, you can actually notice that price tapped into the market's imbalance area. So this area is an imbalance. Price previously did not come into this area, but it came back up to tap before it continued going downwards in this bearish market. So yeah, you continue looking. Let me show some more examples. Price tapped into the market imbalance area before it continued moving down. Here too, price tapped into this market imbalance right here before it continued heading down. So yeah, just do back test. I'm just showing you guys some kind of back test where you guys can fall on data to back up this market's imbalance theory. So you can draw a rectangle right here, same thing. Price tapped into the market imbalance before it continued going down. This area right too, price initially tapped into it, but went down before there was a shift in market structure. This is a higher high was from, this was a previous high, but a higher high broke the structure. Okay, yo, Antonio, is that you, Antonio? Okay, you said thanks. You have two accounts, the original and a secondary. That's the one he's managing. Initially, he was trading with IG. Well, the question is maybe what I was trying to ask was, do you have control over the accounts? Like you can log in, you can withdraw your funds, you have control over the accounts that he's helping you to manage. So yeah, this is the markets imbalance. Very, very nice order flow that I'm talking about. Okay, nice. Okay, that's good. Okay, I'll just worry about your safety, bro. No, there are quite a few. My friends actually got scammed on Telegram a few years ago during the COVID pandemic. 2020, they had the Forex, there were a lot of Forex scams on Instagram, on Telegram. So people told him to deposit like $500 US, $1,000 US, transfer the money, they will manage it for him. So he actually transferred $500 US to someone over Telegram, and he never got the money back because the person promised huge returns. So yeah, I'm just being wary, just asking you guys. And that same guy who was he did not want to learn trading also. Back then, he asking people to manage money. That's the reason why I'm just sharing. Hopefully that you will learn trading. Hopefully you can manage your own money. You can do well for yourself. So yeah. So my friend lost a lot of money due to all these scams, and he actually took time to learn trading. He sat down, learn, and then 3 years later, since early 2019 until now, 3 years later, he's actually trading pretty profitably on his own. So yeah, it takes quite a lot of time to learn trading, but once you get the gist of it, I told him, well done, man. He actually took the time to learn. So bro, Antonio, so maybe I can get you started on trading by yourself. So maybe, no, I wouldn't stop you on what you are doing, but maybe you can start to learn on Inner Circle Trader. You can search it on YouTube, bro. Inner Circle Trader or Smart Money Concepts. You can read these two up. I really, really recommend it. I have a friend right now who currently do not know how to trade. I recommend him Inner Circle Trader or even Smart Money Concepts. They actually start to understand, start to see, oh, where did I enter the buy? Where did I enter the sell? So maybe you guys want to see how I trade. So the turtle trading strategy is just like that. So if I were to give my personal opinion whether the turtle trading strategy still works in the current market, I would say the rewards reaped from this method is not that great. The risk to reward isn't good. It's not that good anymore. Because last time, people always believed that stocks would continue rising. They always believed that stocks would continue rising. So back then, if the turtles were trading in a long, they were buying, heading upwards, they could have reaped that profit. So I would believe they turned 5,000 to 100 million. So I would believe that back then there was like only one trend was forever going up. So yeah, right now it's volatile, price moving different ways. There's many events going on in the world, the Russian-Ukraine war, and especially those who are trading right now, do be careful of the US midterm elections. It might cause more volatility in the markets. So maybe just to show you guys how I trade, I'll clear out the charts, I'll close out this indicator. I'll just present to you how I trade. So I normally like to craft. So I'm using Smart Money Concepts and some ICT style concepts. So how I trade is, I always like to look at the daily first, top-down analysis. You can see I don't use any indicators. I close out all my indicators, everything is crossed out. So let me X it out. So I don't use any indicators when I'm trading. I don't use RSI. I do not use a MACD. So how do I do it? I like to craft a story on the charts. So it's like I'm looking at a picture and I'm explaining to people what is going on. So looking at this area, I want to know, why did price cause this bounce? I want to know every single part of the chart. Why did price cause this? Why did price cause this? I want to know, why did price reject down to? Before I start trading any currency, I want to know the story. So there's a storyline behind it. So if I draw a line right here, using smart money concepts, draw with a magnet tool. You can press this magnet tool, it sticks. You can see it sticks very, very nicely. Stick it, you draw one line. So what did you notice? What do you notice? Let me zoom in. Price went down to clear all these wicks, clear all this liquidity. Just take it as, just imagine the market maker went down to cut out your stop losses, gather enough money and continue heading upwards. Just imagine it as that. So I'm using an imagination. That's not what is actually happening in the market. So I'm just saying that price came down to grab liquidity from all these areas and then continue heading upwards. So what do you call this area? I call this the sell side liquidity. Let me change the size to 16. So sell side liquidity, price came down, grab liquidity and continue heading upwards. And we have a minor liquidity grab right here, but I will not write it out. And price went up. Why did price reverse from this area? So I'm looking, liquidity was built up here and here. So I'll draw out. Price went up to this area and cleared the buy side liquidity. So let me change the text size to 16. So buy side liquidity was cleared right here. That's the reason why price reversed back down. But looking at this area, I'm trying to craft out a reason. I can't see anything on the daily. What happened? What's going on at this area? Why did price, what was this area that caused price to bounce? And if you look at the date, this was on Friday, 4th November. It was the release of the US, the NFP data. So NFP data release, it's a very, very important event. So Antonio, do take notes, the first Friday of every month, they release the NFP data, but the unemployment rates worsened for the US dollar. That's the reason why Euro USD continue going up. So I cannot see anything on the daily. I move on to the 4 hours to get a better picture, craft the story on what is going on. So what do I see? What do I see? I see that price came down to the demand zone. Demand zone. So I'll just turn it green. I'll name it the demand zone. Inside center. So price tapped into the demand zone before it bounced and continued bullish. Well, and then looking back at this area, I want to know what is currently going on at this current area. Price recently cleared also the buy side liquidity. Buy side liquidity was cleared. So yeah, that's why it reversed down. It cleared the previous high, causing price to reject. So where are we located right now? Looking at the 4 hours, where are we located right now? We are currently within the 4 hours market imbalance area. So I draw a line out. You can take a look. We are currently resting in this imbalanced area right here. We are currently inside. So with all this liquidity building up, I might potentially say price might reverse, might potentially go up, clear this area, close. So I'm actually looking for scalps. I do not do swing trading. I do not try to swing a very huge part of the markets. I take shots or longs on the 15 minutes, 5 minutes, or even the 1 minute chart. So with that being said, I'm on the 4 hours. Let me type it out. 4 hours market imbalance area. 4 hours market imbalance. I'll move on to the 1 hour. So moving on to the 1 hour, I noted that price is still in that area. So what I want to do is, there's no picture for me to pin right here. There's 1 hour, there's nothing. We are in the 4 hour market imbalance. Moving on to 30 minutes. Is there anything on the 30 minutes? Yes. Price tapped into the 30 minutes imbalance area. So maybe I can mark it out, but let me check 15 minutes first. Nice. 15 minute tapped in. So I can clear out the 4 hours one already. I'll rename it to This is how I do my top-down analysis. 15 minutes market imbalance. So price is currently there. So if I were to look for a long, how does a breakout structure look? It looks like this. Price goes down, up. Then what does it do? How does a breakout structure happen? Price goes up. It breaks this area. Comes back down, heads up. This is where you start to take your long. Same thing. What I'm looking for is, look at this. I'm looking for price to potentially break this area before I wait for price to retrace, and then I buy to the upside. So just marking it out quick on the charts. So for tonight, I'll probably be pretty chill. There's nothing for me to take at the moment. So I'll just hold for price to break our market structure top. I'll just wait for price to break that area before I look for any potential longs to the upside. Maybe clearing this high right here. So yeah, this is how I trade generally. I'm actually looking for longs right now. I'm not looking for shorts. So if there's no longs, there's no nice things for me to take, I wouldn't take anything. So yeah, any questions so far for you guys? Any questions? So I'm just showing a very, very quick overview on my personal trading method. Okay, so yeah, that's about it for today, guys. Any more questions? Feel free to let me know. I give you guys another, maybe 30 seconds to ask me any last questions before we end this webinar. Okay, my throat is pretty dry, a bit tired. Drinking is just talking, then my throat got dry. So yeah, guys, if there are no further questions, I'd like to thank you guys for joining me today on this webinar. Let me scroll up. Thank you very much for joining. Hope you guys stay safe trading. There's the US midterm elections coming up. Stay safe trading. Take care. Your risk, just manage your risk. And Antonio, remember, just take your time to learn how to trade. It's fine. And yeah, you guys have a nice day, man. Hey, thanks. Thank you. Hey, bye, man. You guys are the best. Thank you for supporting me. Goodbye. I shall leave now. Take my leave. Bye, guys. Stay safe.
Hello everyone, my name is Emily. Today we will look at what influences the price movements of major currency pairs. Currency pairs are influenced by geopolitical events, central banks' interest rate decisions, and macroeconomic data. For example, the Federal Reserve, the central bank of the US, maintains financial stability by increasing or decreasing the discount rate. The Fed sets target interest rates at which banks lend to each other overnight, but it also sets the discount rate, the interest rate at which banks can borrow from the central bank. If the Fed raises interest rates, it increases the cost of borrowing to slow down the economy. On the contrary, in order to stimulate the economy, the Fed lowers rates, making borrowing cheaper and encouraging spending on credit and investment. Economic releases such as major economies, CPI data, non-farm payrolls, gross domestic product, retail sales, purchasing managers, index, and others can influence the value of a currency and create volatility. Politics, trade wars, elections, corruption scandals, and changes in policies can create political tensions which can influence the forex market. For example, Brexit and British or American elections have been major events in recent years which have affected both the political and financial spheres. Traders who are new to forex trading tend to choose liquid currency pairs like the euro against the USD or the USD against the JPY. They also spend a significant time on researching and learning the forex market and the currency pairs they are interested in by analyzing technical charts and monitoring economic data. Choosing the right forex trading strategy, cultivating discipline, and eliminating emotion are also important. Depending on your schedule and lifestyle, you can also choose the right time to trade, which will also determine your trading. You can choose from swing trading, day trading, or scalping. Whatever currency pair you choose, or what style you decide to follow, ensure you have a solid education and learn as much as you can about the market you want to trade. Thank you so much for watching us, guys. Bye-bye.